Hello, hello, everyone. This is Richard and Mary Moitho, co-founders of Investor Next Door Club, and thank you for attending this masterclass on developing an investor mindset or having that investor mindset because it's really kind of a paramount thing when you start thinking about investing. There's a mindset that goes with it.
Honestly, it is the one thing that probably prevents most people from ever even broaching the possibility of becoming an investor. You see, when we were forming our company, Investor Next Door Club, one of the things that we realized is that word investor for a lot of people takes them out of the game.
Yeah.
I mean, I was at a financial conference and someone said this quote, and it just made so much sense. They said, sometimes the things you believe to be true that simply aren't true can be the very thing that is preventing you from being successful. I'm going to say it again. Sometimes the things you believe to be true that simply are not true can be the very thing that is preventing you from being successful. So it is really whatever it is you think about investing or what an investor looks like or where you think you should be or where you think you need to be or what kind of people are supposed to be. Like all of that, none of that matters. None of that matters. If you want to forward your financial future, take control of your financial future, you're going to have to think differently. So whatever got you here is not going to get you there. And I'll tell you, it is the reason why Richard and I constantly work on ourselves. We're actually in a program right now. I literally printed this off today. This is part of our pact that we're supposed to work on. And I'm just going to read the first couple of sentences of this pact. Like I'm literally working on this today, and it makes so much sense. It says, and you actually have to sign it. It's a pact, and I have my signature here. It says, I acknowledge that the key to taking my business and my life to the next level is to master my mindset and to develop an undefeatable mind. I believe that learning and consistently practicing the mental habits of the world's most successful people is one of the most critical skills I must develop, and that mastering this skill will impact all areas of my life. I mean, it is no accident that we had this scheduled long before I ever printed off this pack, but it really is a cornerstone to your success, not just as an investor, but in life. And investors think differently, they see things differently. We're going to go through all of that. One of the things I learned years ago from a mentor of ours, John C. Maxwell, who's probably the foremost authority on leadership and leadership development, is I stopped saying I can or I can't. If there was something that we wanted to do, we started asking ourselves, how can I? How can we? And that question starts to stir up creative thought processes that wouldn't be available any other way. And that is one of the benchmarks of thinking like an investor. Because an investor sees something and they're like, how can I make money off of that? How can I make that income producing? How can that be an income producing asset? How can I leverage that? It's always a how can I question.
And sometimes it's not even about the money, it's about how can I solve this problem. And the other thing also is when, obviously, as Mary's talking about, you can tell she's passionate about it. When you start to think differently, you do start seeing things differently, and that's not meant to be trite. It's actually it's just true. And one of the hardest things that will happen for someone once they start really developing their investor mindset, it doesn't matter if you've ever invested in anything or not, watching this has nothing to do. It doesn't matter where you've been, what you've started, what you've accomplished. None of it. No one's got this completely mastered, right? But I will say this, one of the things that will happen as you start developing the mindset, as you get more skilled and people start coming to you as a resource, is learning to say no, because there'll be a plethora of opportunities. I never have to look for a deal. I never have to go look for opportunities. Um, Now, doesn't mean I'll go network, but I'm not like beating the pavement trying to go find something. Deals will come to you. Opportunities will arise in front of you where someone sees a problem, you're going to see a possible solution, or you're going to go, I know somebody. I know someone that can help you with that. Knowing the solution or knowing the person you can have someone else go to actually creates an opportunity for you as well. But we're going to be talking a little bit about your personal efforts as it goes towards, investing, and the mindsets and the things that we're going to cover tonight. It's not everything, but gosh, it certainly covers a big chunk of the foundation that you're going to want to kind of just, let some of this marinate on or rewatch it or so forth. And I'd encourage you to take good notes and feel free to ask questions, drop them in the chat. We're happy to answer those. Yes, that's good. So we're going to dive right into this. Developing an investor mindset, separating yourself from the herd. Most people don't see themselves as an investor, and there's a good reason because they're not, or they think they can't. So then, therefore, they never start. So we're going to dive right into all of this tonight. It really is about having the mindset. It's not about your bank balance. Whatever you think your bank balance is at right now, or whatever you think it should be or isn't, or whatever you think your portfolio should be. Maybe you have a 401k, maybe you have a self-directed IRA. All that is fine. Maybe you don't have any of those things. Starting from zero is not a bad place to start, but an investor mindset is really about how you think, not how much money you have. Because if you have the right thinking for the right deal, you can go find the right people and the right resources, And we're going to talk a little bit, there's a difference between speculators versus investors. Spectators react to spectators. I'm sorry, I'm thinking of speculator. I apologize. Spectators versus investors. Spectators, they're going to react to the market, right? Investors will look for the trends. They're going to read what's going on. Spectators chase headlines. Investors chase fundamentals. Warren Buffett says it best. It's like, I've got a really great way for people to get rich. Problem is, no one wants to do it because it's slow. We look at Warren Buffett, the Oracle of Omaha or whatever, and it didn't start off that way. Everything he did was based on a long-term plan. We always play a long game. We have some short-term income plays that we do, but we focus on long-term, long game plans. And spectators usually focus on hope versus investors. They plan, they position, they participate.
Investors really, it's long-term thinking. It's just like what Richard said. It's not about get rich quick. It's okay if you get rich slow. And that's really what investors think about, is they think about, how does this turn out, not just 2 years from now, but decades from now? What happens? This is why investors really talk about compounding interest. You've got to zoom out, right? Wealth compounds across decades. It doesn't compound across quarters. And so a lot of people, especially in today's day and age, it's all about the quick money. Like, how many people jumped on the crypto train and then lost money in the crypto train because they wanted that quick hit, that quick fix? If your decisions only make sense over the next 30 days, you're speculating, you're not investing. Investors think long term. And patience is the edge. Time in the market beats timing the market. So sometimes your advantage is really staying in the game long enough. And, one of the things, Richard and I have been entrepreneurs for decades now. And the one thing that you've got to understand about starting a new business is you got to stay in business. And it's about the long game. It's not about it's not about starting slow. It's about staying in the game and lasting the duration. And when the longer you're an investor, decisions start to become easier, because when time is long, then short-term noise stops really mattering. You stop worrying about what's happening in the interim. We went to a Tony Robbins business mastery seminar years and years ago. And one of the things that he talks about is there's seasons in finances, right? Just like there's summer, spring, winter, and fall, there's summer, spring, winter, and fall in investing, in the financial seasons. And in winter, people panic when we have a recession or when there's a market downturn. People who are investors expect winter to come. And that's when investors make the most money, is because they're not distracted by the short-term noise that's happening, because they understand the cycles and they zoom out, they look at the big picture for that.
So it's really important. And for those of you who may not realize, we're actually in winter now. The winter's been going on for actually a while. They've done really a good job at trying to avoid using any kind of recession words. And there's some industries that are doing well. Most are still like really struggling, and small business is getting crushed in a lot of different ways. But in seasons like this, and really in all seasons, you want to protect your seed. Now, your seed is what you have surplus of that you can invest with. And maybe you're thinking, well, gosh, I don't have any surplus right now. That's okay. We've all been there. So the thing to do right now in this season for you is eliminate bad debt. That's why we talk about, how you can eliminate your high interest, credit card debt, your personal type loans that are out there that are just eating your lunch at 29% interest, right? This is where you start living below your means. This is where you start figuring out where is all your money going that's not helping you grow your future. See, the surplus you have is seed, and that seed needs to be planted. And it doesn't get planted for a month. I mean, it's kind of like if I take an acorn, I stick it in my front yard, and I go out there in 30 days and like go dig it up. I'm gonna maybe see some roots that sprouted from it underground. I'm probably not gonna see anything above ground. It takes years, if not decades sometimes. There are ways that you can create additional income without having to wait for the big harvest, but you got to think long term. So that's why you got to protect your seed in all seasons. You don't spend all of your seed, and you just got to build that buffer. Got to make sure you do have that emergency fund. And before you have the emergency fund, maybe the focus is getting out of that high interest credit card debt or any kind of loans that are that way. Do you have things that are costing more than what they should, given, are they proportionate to what you have coming into the household? All these things matter, which is why we talk so much about, using a cash flow calculator or using the Pocket Nest tool that we have that we brought into our company, is so you know where everything's going at any given moment.
When I was looking at this, it makes me realize this is the reason why people with a lot of money still drive used cars.
Yeah.
Like you can read biography after biography after biography about all these self-made millionaires, these billionaires. They drive used cars. They live in the same house because they understand that that's seed stock. The gap between what they earn and what they spend is seed. And they're not going to eat their seed. They're not going to eat their seed in cars. They're not going to eat their seed in houses. They're not going to eat their seed in vacations. And they probably do all those things, but they're not going to waste that seed because they're going to continue to plant seeds so that it can grow more fruit. So you've got to have a commitment to learning. Knowledge is the only leverage that no one can take from you. You hear multimillionaires, lots and lots of them have made millions and gone broke and have made millions and gone broke. And the thing that they always say is, I could build it again. Because what no one can take from them is the knowledge they have from the experience they have. So you've got to commit to learning, and not just learning from your own experience, but learning from somebody else's wisdom. You've got to pay tuition to the market. So books, courses, communities, mentors, it costs money. And your greatest investment is investing in yourself. That's the reason why when you go to some of these events, like we're in this mastermind right now, and he talks about, okay, and he talks to people, you've probably already produced really extraordinary results, because people understand that people who produce extraordinary results continue to invest in themselves. So you've got to understand that. And then you want to study one asset class deeply. You want to be an expert in one area. You do not need to be a jack of all trades and a master at none. You want to be a master in a single area, because if you have mastery, but you only have $10,000, that's going to take you further than someone who has no mastery, just a smidgen of skill with $100,000. So your mastery can take that $10,000 and start compounding it over time. So that kind of depth of knowledge creates confidence that you can actually act upon and turn that into actual income. And you want to surround yourself with operators, people who are in the game, people who are doing the things that you want to do. Surround yourself with people who have been investors, and you want to choose that carefully. You want to choose people who build business the way you would want to build business. We've been around people, and we've looked for different partnerships, and we start to get to know people, and we realize that kind of character is not who we want to be around. Like, we want to do business and do life with people of character, and whoever you do business with, you're going to end up doing life with them. So choose very carefully.
And then there's, calculated risk, calculated risk tolerance. Investors don't avoid risk, they manage it. There's risk in every investment. There's what you know, there's what you don't know, and there's what you don't know that you don't know. You're trying to figure out all those buckets as best you can, but things change. So it's understanding what's the worst case scenario. Yes, the best case scenario is great, but we need to make sure that we understand what's in those all those buckets. So risk isn't the enemy. So avoiding all risk doesn't guarantee that inflation, avoiding all risk is going to pretty much guarantee that it's going to erode your wealth. Because if you hold money, if you had $10,000 and you held it for the next 10 years and did nothing with it, it's going to be worth about 7,300. So money has to go someplace to grow. If you put it in a CD, it's going to keep up with inflation in most cases. So bottom line is money's got to have a place to go. Money's going to always be at some kind of risk. That's why you have to have enough seed that you can deploy that you don't have to live on so it has a chance to grow somewhere else. And then there's the size of the bet. You never put so much money into a single deal that if the failure happened, it was going to be, devastating to either, your home, your livelihood, or any of those things. So you want to position. That's why we talk a little bit about allocation. We've had people that have said, listen, I want to put this much money into the crowd fund, and I've advised them not to. I've encouraged them to spread that out and don't put it all in one place. And then you got to be able to underwrite what the downside is. You got to know what the worst case scenario is. Everything doesn't always turn out rosy, and there's going to be some things that you may lose again, but if you don't play the game at all, there's no gain whatsoever. Every investor, no matter what they invest in, there's something that is going to, not get the desired return. So you got to know for yourself for sure that you're okay with how this goes, but you understand the operator, you understand the deal, you understand what you're doing in it, and you're okay with taking that risk. And you make that decision either with your spouse or you're making it on your own as a single person. But regardless, you're making an informed decision and calculating that risk.
A few weeks ago, Richard did a masterclass on spotting financial scams. And that's a lot about risk tolerance as well. Sometimes people think that it's not risky because it sounds good. The only problem is they didn't know what questions to ask when it was actually relevant to ask them. And so this is one of the reasons why it's important to be in a community. If you're somebody who wants to start investing, you've got to be in a community, because inside of a community, conversations occur that have you thinking about risks differently and asking questions differently about what's at risk. And so you won't know what questions to ask because you've not been exposed to it before. And that's why we always say in our community, more is caught than is taught. You're going to learn more about risk and avoiding and mitigating risk from somebody else's story about when they've lost. And you don't have to have the same mistakes. You don't have to have that loss. But if you can surround yourself around enough investors, you'll hear enough stories where you're going to start to piece together questions that you need to ask to start to mitigate your own risk when the time comes. And then you've got to recognize opportunity. I'm going to actually have Richard talk about this because one thing, Richard and I have been together for 26 years and almost 27, and we've been married 24 years. And I will tell you, this man sees opportunity in a lot of things. And even though he may not participate in every opportunity, he'll see the opportunity in almost all things. And where most people see problems, investors see undervalued opportunity.
There's just not enough time sometimes. Right? But anyway, so you start looking for, a pattern over panic, right? Where people are panicking about different things, and there's things that are happening in commercial real estate. There's things that are happening in a lot of different sectors, and this is where you look to see where you can, be part of that solution. Maybe it's part of the solution of winding it down. Maybe it's part of the solution of propping it back up, or maybe it's a solution of taking it over. But there's lots of different things. And then as you start to train your eye, the opportunities, opportunities don't look like opportunities when they arrive sometimes. They look like risk. But if you study past those cycles, then you'll kind of see, oh, wait a minute, 2 years down the road or 18 months down the road, this is when this really starts to turn around. So if we can get control of this now, we can really set something up for success. However you want to look at that. But you want to make sure, and you're going to start looking at things differently after this class, after this session, is when you start to have that trigger go off, but what if this happened? That's a good sign. It means your radar's thinking about things, but you want to catch it. And then I want you to ask, but what if this was done? Or how else could this be done that it eliminates that risk. And you just play it as a mental exercise, or even write it out or draw it out, whatever you want to do. And you'll start to see things that you didn't see before. It doesn't mean you're supposed to do it, but you are training your brain to see and to do things differently. And then, act, don't admire. Seeing an opportunity and taking one, on are very different skills, right? So you can see the opportunity and then taking it on. So this is why in the beginning, it's kind of like Monopoly, right? Monopoly is a fun game to play, and you can test your risk levels on it. Of course, it's still a little bit of game of chance. You're rolling dice. You don't have control of that, but you have control of your choices and the decisions that you make and why you make them. So make sure that you're, in the beginning, you're playing with Monopoly money. You're just like, well, what if this deal went this way, and how would this perform if I did this? So it just gives you a chance to kind of play around with some things, whether you're poking around in real estate or poking around looking at index funds or other stocks. I don't recommend anyone doing individual stocks that doesn't have a really good coach on that, or that you've got an expertise in that industry, because most people win better when they're in the index or they're in real estate versus when they pick a single stock. It's just hard to pick sometimes. There's a lot of professional people that are looking at a lot more data than you and I on a daily basis. So bottom line is, start seeing opportunity differently. Start looking at how could you participate. It doesn't mean you have to do it, but when you do decide to do it, you want to make sure you're with the right group of people to do it.
All right, in the interest of time, I'm going to move the slides a little faster because it's 7:22. All right, so systems thinking. Really, as an investor, you got to build a machine, not just work the job. So I didn't put it in here, but some of you remember the cash flow quadrant with Robert Kiyosaki's Rich Dad, Poor Dad, where you've got employee, self-employed, business owner, and then investor. So you've got to trade your time for systems. So at the end of the day, the investor understands that they got to put their money to work and not necessarily them doing the work. So your job earns you dollars, but a system earns you dollars while you sleep. So your goal is to earn more systems, and then cash flowing assets compound over time. You want to have enough, like at some point in your investment journey, you want to have enough income producing assets that income that gets produced on a monthly basis covers your lifestyle. And then then that's real freedom, is when your assets covers your lifestyle. You are now job optional, and the rich build, the rest rent. So if you want to be rich, you've got to build an infrastructure that other people use. You got to be the owner of the machine, not the cog that's inside it. And one of the things we talk about is our Investor Next Door Club cash flow system. So in our system, one of the things we realize is that the rich have the right side of the symbol, right? They make money, they buy assets, they create cash flow, and that's all they do. What we've done is we've added the left side to help you, everyday people, be able to pay off their debt and earn additional income. Because when they join our Investor Next Door Club, they're going to get to access different kinds of strategies, investment strategies, tax strategies, financial strategies. They're going to get excited about those strategies. They're going to share about our community, which then allows them the opportunity to revenue share with us and make incredible money. And once they're completely out of debt, then they have the option to buy assets, either with us in their crowd fund or on their own with all the information that they've learned. And that creates more cash flow, creating them more money. So this is really one of those systems that investors use to really streamline their processes and have their money go to work for them.
And then there's, developing emotional discipline. The market pays a premium to those who stay calm. When you're in a storm, if you're on a boat, right, and the captain is like, "Oh, there's a storm coming," he's freaking out. You're probably going to freak out also. So it's learning how to stay calm no matter what's going on. Fear and greed are expensive. Most investment mistakes aren't analytical, they're emotional. So selling in fear or buying in euphoria, which is what a lot of people do when certain markets were doing what they were doing, whether it's crypto or certain stocks, this, that, and the other, that becomes a problem. And then freezing under pressure. Now, you get to write the rules first. Decide how you're going to buy, right? You're going to hold, you're going to sell. What's that criteria that you're looking for, that you want to focus on? If you're just getting started, you're going to pick something that you're comfortable with. That's fine. It's still probably going to stretch you no matter what. So But you're going to find when emotion spikes, you're going to be able to follow a plan, not just a feeling. There's a lot of people that operate business just on feelings. We're passionate. And at the same token, Mary's an engineer. I'm a lifelong entrepreneur. We have a methodical approach of how we go about things. So it's important that you understand how are you going to act when the storm shows up. Boring does beat brilliant. When we look at real estate, we're not looking at the sexy high rises or the trends or this, that, and the other. We're looking at the stuff middle America lives in or uses, storage facilities, multifamily, things like that, things that where people need to live, and that's where the middle part of America is. And listen, Walmart did a pretty good job at it. So, bottom line is you're looking at those things. When you go for trendy and sexy, you increase a risk level that most people aren't comfortable with, which is why it's left for the big institutions and the pension funds who can afford that kind of risk.
Now, you've got to have an ownership mentality. And here's the good news, bad news. No one is coming to rescue your finances. It's not going to happen. Some miracle is not going to happen that's poof going to have you change your finances. And that's actually good news. You've got to take the wheel. Your pension, your Social Security, lottery ticket, that's not a plan for your future. Statistically, 58% of Americans will retire with less than $10,000 in their bank, which means they're going to retire completely broke. So when you own your financial outcome, the whole game completely changes. So blame is a broke habit. Like if you blame the economy, you blame the administration, you blame gas prices, you blame AI, you blame anything outside of yourself, that is a habit that broke people have. People who are investors, people who are systems owners, people who make stuff happen, they take 100% responsibility for making something happen. So none of those things are your plan. So investors focus on what they can control. And your future self is counting on today's decisions. Ownership means you act now for the person you'll be in 10, 20, or 30 years from now. They can't speak up, so you have to. You've got to ask your future self what you need right now because he or she needs you to actually show up. What holds you back is not who you believe you are. It's who you believe you're not. So now's the time to actually take control of your financial future, which is one of the reasons why we have tools and calculators and templates inside of Investor Next Door Club. So when you become a member, or if you are already a member, and we've actually extended this to our affiliates, you have access to Pocket Nest. It's a financial technology company that we've partnered with, and they give you personalized financial journeys. They use behavioral science integration to help navigate your journey through your finance basis on how you behave currently. So they're not going to try to make you to be something that you're not. They're going to look at how you already operate around financial decisions, and they're going to help you make better financial decisions. So they cover all gamuts of the financial spectrum because we believe as investors, if you don't know where you are, then you have no control and no tools to actually get you to where you want to be, which is why we added Pocket Nest.
And unlike other apps and programs that are out there, these guys, it's 100% confidential. The data is 100% private. They do not sell it off. There's other programs out there. They will sell it off. They make a lot of money selling it. They will hit you up every day for a new offer. This is why we partnered with them. And we're the only non-financial company they've ever contracted with. Everyone else is banks. Everyone else is credit unions, insurance companies. And they loved what we were doing educational wise. So, they selected us. So we're happy to have this relationship. Now, you can also get more details on our website about that. If you go to investornextdoorclub.com, you can find it on there as well. But relationship capital is huge. Your net worth flows to your network. The reason why I don't look for deals is because I have a really great network, which is why we built the club and a community for people to network with, because it just makes things easier than having to wear 55 different hats. Okay. Deals travel, through trust. It's not just because of who you are or what it is. It's, bottom line is you got to build up that trust factor and relationship with people, because the best opportunities, they don't hit the open market. They're private. They will come to you before they hit the streets. And that is the best deal that you want to try to be able to work with, because now you're not dealing with a bunch of other people in the mix on it. And then give before you get. So we've always been big givers in the sense of where we help people, we provide resources. We've done all of that over the years, and it makes it very easy when I go to someone and ask for a favor or ask for something, or can you introduce me to so and so? They remember what we had done for them before in the past. But then community really compounds. One good investor friend changes your next 10 years. I met somebody at a party that radically changed my world of entering into the private investing world, and I'll never forget it. And it was a random conversation, but that conversation changed everything that I was going to do for the next 20 some odd years. So one conversation can really matter. Do not shy away from striking up new relationships.
Now, reinvestment is a habit. So you've got to plant your seed every single season. So reinvesting is a habit, so is spending, so is excess. All of those are habits,
Yeah.
and you've got to build a muscle that you probably don't currently have. So as you start to make more money, don't eat the harvest, okay? Gains that are spent, they're gone. You've got to get into a habit of reinvesting that seed
Yeah.
until you've got enough income producing assets to fund your lifestyle. Then you can start talking about increasing your lifestyle. Then you can start talking about possibly spending some of those gains. But if you want to be able to really build that system, that machine that we talked about, you've got to get into the habit of reinvesting that seed, and you want to automate the discipline. So if you get a paycheck, you want to have that paycheck, a portion of it automatically go into your investment account of whatever that is. If you get a profit, if you get dividends, you want to automatically reinvest that back into whatever your portfolio is, wherever you're going to build that portfolio. And this is where compounding lives, okay? Einstein called it the eighth wonder of the world, and it only works for those who keep reinvesting long enough to feel it. Remember, the investment game is the long game. It's not the short game. It's long term, and it happens over decades. So you've got to be ready to run the marathon, not the sprint.
Now, having a growth identity, stop saying I'm not good with money, start saying I'm becoming. That sounds simple, but you really got to catch yourself, because, identity drives behavior. You'll always act in alignment with who you believe you are. Change the story and the actions will follow. This is not pie in the sky. This is not woo woo. You want to start catching what's coming out of your mouth. You'll catch yourself in conversations. I've got something that is dragging on today. I caught myself 3 times saying something that I haven't said in 10 or 15 years, and I had to catch myself before it came out of my mouth and redirect my thinking and redirect what I was speaking. So this is an ongoing thing that we all do. You're going to go from I can't to you're learning. You start investing in knowledge and learning, you're going to create new opportunities. Your mindset is going to shift around those things, because really your mindset is that most important thing that you could possibly ever invest in. And you are becoming an investor. It is not right now, maybe for some of you, but it's going to be that day where you make that leap, right? So maybe it's not someday, but it can be right now, but right now in 30, 60, 90, 100 days. I don't know what it's going to be for you, but you really are one decision and one deposit, one deal at a time. Somebody that's very young, 30-year-old little multimillionaire young lady, and she says it best. She goes, "You're one deal away from transforming your life forever." And that happens for everybody that pursues it. Now, everyone's timing's differently. And if you catch yourself in the comparison game, it is going to bring you down. I'm telling you right now, it doesn't matter what anyone else is doing, what you haven't done. What matters is what you're doing right now, because that is the most important thing that you could be doing.
Now, wealth is what happens when a long term thinker protecting their seed, committed to learning, takes calculated risks on real opportunities. builds systems, stays disciplined, owns the outcome, invests through relationships, reinvests relentlessly, and refuses to stop becoming. That's when wealth happens. You've got to decide that you're done in this rat race and you are going to be someone who is going to become an investor, have income producing assets that fund your lifestyle, and so that you can have freedom. Now, everyone's invited to join us with Investor Next Door Club. There's lots of different ways. When you become a member in Investor Next Door Club, you have access to our Inc. Academy. There's over 100 videos on there, actually tons and tons, hundreds of hours of video training on there. You've got an incredible community that's going to help iron sharpen iron and help you grow. You can participate in our crowdfund and micro invest with as little as $500 and start earning fractional ownership of real estate. And you can take advantage of our affiliate program and refer people to this incredible community and start earning even more money. If you are a guest and you want to know more about Investor Next Door Club, reach out to the person who invited you. They can send you to a video that's on our website. You can hear all about it. But we would love to have you join our community because we know you're here because you want to change your financial future, and we'd love to help you with that.
Everybody probably has a desire to build wealth through real estate. You've heard about it since you were probably born. The problem is that most of the time it's super expensive, or the stuff is completely outdated and there's no real support. I want you to know that we're here to meet you wherever you're at, and we're happy to be on the journey with you. We wish we had something like this when we started over 20 years ago. It just didn't exist. Matter of fact, I don't think it really even exists today the way that we have it set up. So if this is something that's piqued your interest, we definitely would like to talk with you more, get back with the person that introduced you to this, and we'd love to have you in the club.
Have a great evening.